If someone had, again, I'm trying to simplify the question as much as possible and not make it too broad. If someone, one of the guys watching has in the region of £10,000 to £20,000, would you advise them to start with property or the stock market if they want to make money?
I started with the stock market, but I made most of my money in property. So
okay,
I mean, if you find the right deal in property, I mean, I think it's a lot easier to go down the property route, because first and foremost, you're not seeing a price ticker above the door every time you walk in it, and so you're sort of not as emotionally sensitive to the value of that property initially. It requires a bit of work as well, just to make sure that you're not overpaying and you're in a good area and you're buying a little bit below market. There is opportunities all the time. I wasn't expecting 2 weeks ago. I didn't know I was going to buy property yesterday. It was just, it came up on the market. We went over, and then when the estate agent said, hey, the lady's sick, we made a lowball offer, but said, look, we could pay cash. And she said, okay. And then we closed the deal really quickly. She needed the money. And so those type of opportunities, they do exist. And I definitely think if you're starting off small and you want to make a bit of a leap, if you found an opportunity where you could get a property and there's a little bit of margin in it. So for argument's sake, in order to buy that property for $235,000, we would have to put, if it was an 80% loan to value, we'd have to put 47,000 down. But the minute we buy it, we could refinance it and take 100,000 out. So all of a sudden your down payment doubles. And then you reinvest that money while you're paying down your property. So you're paying off the principal while you just suck 50,000 in liquidity out of the deal. Those type of opportunities are definitely out there if you have a look. So it's kind of hard. If that opportunity doesn't exist, it's always easy just to have it in the market liquid. And if you can appreciate it, slowly, I'd leave it in the market for however long it takes until you find that good opportunity. And it's kind of interesting because the fat pitches that I take, they're usually a couple of years apart. So I bought real estate in 2012, 13, in and around that area. Didn't do anything until around 2016. So it took me a couple of years, figured out uranium miners, and that's sort of an anomaly there. Now, I thought that was going to move a lot quicker than it did, but it took me a couple of years to find that opportunity. And then it took me a couple of years. Then I started getting focused on Bitcoin in 2018, later 2018 after the sell-off. So every couple of years, there seems to be an opportunity if you keep your eyes open. And so yeah, you could definitely invest it liquid until you find that opportunity, but just don't dive into anything. There isn't really that margin in every single asset that you see. Like every property that you see may not have that type of margin.
Absolutely. Do you think it's more important to focus on the actual buying of the property in terms of getting the best deal, or trying to focus on the profit in the exit plan? What I mean by that is obviously more margin can be made in a better deal than trying to renovate and sell at a higher price.
Yeah. Well, one mistake that I made when we bought in 2013 was we looked, the first property you buy, you pay 8% down. This was at the time, you get 92% loan to value. And we looked for a property that we wanted to live in. And we bought a property at the time in the area. The prices fell from 450,000 down to the property that we bought was 126,000. We wanted to live in that property. And so that's why we bought it. But on the corner, just down the street, there was a property for 155,000. So we put 10,000 deposit down on that property. And obviously we had to renovate it, but we put 10,000 down. If we bought the one on the corner, which is 155,000, it would have cost us, we would have had to put down 12,000 euros, a little bit more. But this was the added value was, it was an end house and there was space to build a second house. And the minute we bought ours and closed it, someone bought that other property and built a second house on. So for $250,000, you end up with two properties, and the yield on that was about 28. They were about 1,200 euros per month at the time in rent per unit.
Right.
So you'd be looking at 25,000, 10% yield. You own two properties that are now priced probably closer towards $750,000.
Right.
And so, yeah, I mean, I would definitely look at the deal for sure. That one, in that case, it was a little bit more expensive, but the upside would have been another couple of 100,000 for sure. We would have been able to take out of it.
Right, yeah, because that's why I love property too. It's like a bank account that beats inflation. That's pretty relatively safe in the grand scheme of things. And obviously, I don't know if you watch a guy on YouTube called Meet Kevin.
I've watched a couple of his videos.
Yeah, he focuses a lot on. Well, he does a lot. Well, he actually turned, I think, 650,000 in 2020 to $20.5 million just on the stock market. But all his all his initial investment came from the property market. So he's been flipping houses, changing houses into basically HMOs or 4-bed apartments, and he's been paying the principal pay down over X amount of years. And then when the property crash, when the stock market crash came, he was in a position to refinance everything and invest it into the stock market at a lower price, and obviously reap the gains from that.
Yeah. That's what a lot of people don't realize. A lot of people have equity in their home. You know, a lot of people have equity in their home. Like, I tell my mom all the time, my mom has a property that she's fully paid for. And she's like, oh, I'd love to do this. I'm like, just take it out of your house. You know, like you can afford to do it. You know, a lot of people don't realize that. And so, yeah, like he was, he's probably one of the few smarter people that probably ride on the lows, down 30%. Asset prices will definitely recover. I'm going to refinance for sure. Absolutely. Yeah.
No, I like that point as well you just made about people. I've got a lot of friends, and I know a lot of people, they want to see either money in their bank or they want to see their property price, actual investment into it going up. But like you said, why not refinance and invest it into another property, and you'll make more money quicker? That everyone wants to kind of play the safe option. But again, I understand it depends on your age. You don't want to take risks. Sometimes it's hard to refinance or remortgage when you're of a certain age. But when you're young, just take the risks, as long as it's calculated, right?
Absolutely.